So our topic is errors and their corrections. So we're looking at errors. So I've shared the handout. I don't know whether you can be able to see it from the group. Anyone who is not the group, you give us your details, probably after the class, so that we can incorporate you in that group. So we go to that group. Most of us are in that group, I believe so. We already have shared that particular handout on errors on accounts. It is written like that. Can you see it? Errors on accounts. Mona. So now we have errors on account. So we have two types of errors that can be committed or done while you're preparing the statements. So while making statements or posting a transaction in the books of accounts, we can make two types of errors. So these errors, they're classified as those errors that do not affect the trial balance. Errors that do not affect the trial balance. So this is the first category. And then we have errors that affect the trial balance. So we have errors that affects the trial balance. So those are the categories of errors that we have. So we want to start with those errors that affect the trial balance. Errors that affect the trial. So these are errors that they are committed, but the trial balance will still balance. So the trial balance will balance with those errors. So the trial balance cannot be able to detect them or show them, to reveal them. So the trial balance cannot reveal them by not balancing. So the trial balance will still be balancing at the end of the period. Are we together? So they are not able to be identified by the trial balance. So number one of these errors is what we call error of omission. Error of omission. So an omission, error of omission, this is where a transaction is completely omitted from the accounts. This is where you completely omit a transaction in the account. You see the trial balance will still balance, but you see there's an error. So you get an invoice, for example, and then you hide it somewhere in the drawer. You don't post it in the books of account. So the books of account will still go ahead and balance without that particular transaction. So that one we call it error of omission. They have given their example. This is where a transaction is completely omitted from the accounts, and therefore the Dumbo entry is not made. E.g., a sales invoice of 400 is not posted in the sales journal. Therefore, there's no entry made in the debtors account and the sales journal. So you've made a sales of 400, and then you have not posted on the credit side of the sales, and you've not posted on the debit side of the sales. So there will be an understatement on the debit side of the debtors and an understatement on the credit side of sales. But the trial balance will still balance, but with a less amount. Tumelewana? That is error of omission. Number two, error of commission. We have error of commission. Error of commission. So this error occurs when a transaction is posted on the wrong side, on the wrong account. A transaction is posted on the wrong account of the same class. A transaction is posted on the wrong account of the same. For example, you have two debtors here. You have C. Mary and G. Mary. These are all debtors. So you make sales to C. Mary. Instead of posting to Mary's, like C. Mary's account, you post to G. Mary. So you made sales to C. Mary, but you've not posted to C. Mary's account, but G. Mary. So the trial balance will still balance. It should not recognize that this one was supposed to have been posted here. So why are we saying that this is the same class? Both of them are debtors or suppliers or expenses. So the same class. So the wrong account of same class. This is called error of commission. Then number three, we have error of principle. Error of principle. So this is where you post in the wrong account, but of different class. It's an error where you post in the wrong account, but of different class. For example, you buy a motor vehicle. You buy a motor vehicle here. We have motor vehicle. And then we have motor vehicle expense account. motor vehicle expense. So you buy a motor vehicle, instead of debiting motor vehicle expense account, motor vehicle account, you debit motor vehicle expense account. You see, these are different class. This is an asset account. This is an expense account. That is called error of principle. It is where you post the wrong account of different class. So, then we have error of complete reversal, number 4. Complete reversal. Which kind of error is this? This is where a transaction is posted to the correct account, but on the wrong side of the accounts. Correct account, but on the wrong side. Correct account, but on the wrong side. This is where you post a transaction, the correct account, but on the wrong side. Example, you withdraw cash from bank. Withdraw cash from, you're supposed to credit bank. So here you see, we have bank account here, and then we have cash account. So you have withdrawn cash from the bank for office use. You're supposed to credit bank, isn't it? And debit cash. So instead of doing that, instead of crediting the bank, you debit bank. And instead of debiting cash, you credit cash. That is called complete reversal. Correct account on the wrong side. That is complete reversal. And then we have error of original entry, number 5. Original entry, error of original entry. Error of original entry. So here, the transaction is posted to the correct account, but the amount is posted is not correct. So you post the correct accounts, but the amount posted is not correct. So you post the correct account, but the amount posted is not correct. For example, you purchase goods. This is purchases. You purchase from Patel Limited here. So you purchase goods valued at 5,000. But now when you post, you add there, you post 50,000. So you come here and write purchases. 50,000. Then you come here and write here Patel. Both of them, 50,000. So you see 50-50. But the correct amount is how much? 5,000. So you posted to the right accounts, but of different wrong amounts. So the trial balance will still balance. Still balance. That is called error of original entry. And lastly is what we call compensating error. Compensating error. So these are an error that cancels each other. These are errors that cancel each other. For example, you overstate the debit side. You make an error by overstating the debit side of an account. And in another error, you understate the credit side of another account. Are you getting? So they cancel each other. For example, you have here sales. You have sales, you have purchases, and you have sales here. So you overstate purchases by 10,000. And then you understate sales by 10,000. So they cancel each other. So you overstate one account and you understate the other account with a similar amount. So those errors cancel each other. Tumezielewa. So we have those kinds of 6 errors here. So sometimes I've seen, even last sitting, this question was there. It was question number 1, which they wanted the student to explain these errors. And they had attached 6 marks to it. They had attached 6 marks to it. Those are so many marks. Now, after that, we need to know how to rectify the errors. We need to know how to rectify the errors. So we need to know how to rectify these errors. We go to the examples given there. We go to the examples. So example, give the journal entries needed to record the correction of the following narratives are required. Narrations are required. So A, extra capital of 10,000 paid into the bank had been credited to sales account. Number B, goods taken for own use of 700 had been debited to the general expenses. And number C, private insurance of 89 had been debited to insurance account. D, a purchase of goods from C. Kelly of 857 had been entered in the books as 587. And number E, cash banked of 390 had been credited to the bank column and debited to the cash column. F, cash drawings of 400 had been credited to the bank column of the cash book. And number G, return invoice of 168 from M Black had been entered in error to J White account. A sales of motor vehicle of 100 had been credited to motor vehicle to motor expenses. So now when we are rectifying errors, we use what we call journal entries. When we are making correction to errors, we use what we call journal entries. So this is how the journal entries appears. The journal entries has, this is the journal entry. The journal entry has a debit side and a credit side. This is how it appears. Now, when you're correcting errors, first of all, note it down somewhere in a rough work, in a ledger. Just note down what happened so that you're able to rectify, isn't it? So in other words, you must identify the problem first for you to rectify. If you don't identify the problem, you will never correct it. You must know the problem for you to be able to correct it. That is how problems are rectified. So now we go to number 1. Extra capital of 10,000 paid into the bank had been credited to sales account. So when you introduce extra cash or extra capital into business, the double entry is you debit the bank account and you credit. So we have 2 accounts here. We have the bank account here, and then we have the capital account. So that is how it should be posted. The knowledge of the point is very necessary here. So when you receive extra cash in form of extra capital to the business, the normal entry is that you debit your bank account and you credit. But now what happened? We have another account called sales account here. So they received extra capital of how much? So now the bank had no issues because there's no way we're being told that the bank had issues, isn't it? The problem was they posted to the sales. So they credited sales account. So they said here bank. How much? 10,000. So that is where the problem is. Instead of crediting here, they credited here, isn't it? So now we want to rectify that error, isn't it? So we cancel here by debiting so that we cancel this amount that was incorrectly posted here and we credit here. So every time you correct errors, we must have debit and credit. So here we come here, we start with the debit. So you debit what? Sales to cancel this amount. So debit here sales 10,000 and you post it where it's supposed to be posted 10,000. So that one you write it number 1. And then they have told you to narrate. To narrate, you are telling the examiner what you are doing. So you say, being correction of extra capital wrongly posted to sales account. You write it like that. Being correction of extra capital wrongly posted to that one, you have done it. Or you write your own English. You write your own English, what you're doing. That is what it means by narration. So that one you have rectified. So we have identified the problem. This is how they posted. It should have been posted here. And then you rectify now. See you to Melewana. We go to number B. Goods taken for your own use of 700 had been debited general expenses. So when you take goods from business for your own use, they are called drawings. So you should debit what? Drawings account, not general expenses. So they took, so here we have purchases. And then here we have general expense account, general expense. And then here we have drawings. So now they took goods for your personal use. The normal double entry is you credit your purchases. Every time you take goods from business for your own personal use, the double entry is you reduce your purchases by crediting it and you debit drawings. So instead of debiting drawings, they debited general expenses by how much? 700. So they said here purchases. That is what they did. Now we need to rectify it. We need to cancel this amount in this account and place it where it's supposed to be placed, isn't it? So we debit what? So here we come here and debit drawings by how much? And we credit general expenses by how much? 700. And then we narrate being drawings of goods wrongly, being correction of drawings of goods wrongly posted in general expense instead of drawing. That one we are through with it, number 2. We go to number 3. That is C. So we have private insurance of 89 had been debited to insurance account. Anything private from the business is supposed to be drawings. So we have insurance account that is meant for business. You're supposed to separate business transactions and Personal. So when you take personal transaction, they should go to an account called drawings. So they have their own insurance account here. They have their own insurance account here. So this is what they did. So when you pay insurance, the normal double entry is you credit your bank or cash account, depending on where that money is coming from. So that one was correctly done, the cash or bank account. That one was correctly posted. But the problem was, instead of posting to the drawing account, they posted to insurance of how much? 89, isn't it? So we need to cancel this amount by crediting this account and debiting drawings. So you come here, number 3, we write here, drawings again, which is 89. And here we write here, insurance. Now, supposing you are narrating, how will you narrate? Can someone narrate it for us? It is your opportunity to narrate. How will you have narrated? Anyone to narrate for us what you're doing? We have rectified that one. How will you write it in English? Being correction of what? Yeah, being correction of private insurance posted in the insurance account, isn't it? So that is what you're correcting. We go to the next one. D, a purchase of goods from C. Kelly of 857 had been entered in the books as 580. So when they say entered in the books, it means both accounts. Both accounts. So we have here C. Kelly. C. Kelly is who? C. Kelly is a supplier or a creditor. So they purchase goods from C. Kelly. So here we have C. Kelly. And then here we have purchases. So they purchase goods from C. Kelly. So C. Kelly, so they said here, purchases. Remember the principle of double entry, the account that is receiving, you debit, the one that is losing, you credit. So C. Kelly is the one losing. So they said here 580, the goods 587. Then here they said here, C. Kelly, isn't it? 580. But the real amount was how much? 857, isn't it? So this one was understatement. Under? Which kind of error is that? That is an error of original entry. So we take the difference. We take the difference of 587. So the difference is how much? Huh? 270. So we increase that amount by 2. So we write here purchases 270. And then here we write here C. Kelly 270 in order to make it 857. Then here we come in right here 4. So who are we debiting? We are debiting purchases, isn't it? By how much? 270. And we are crediting who? C. Kelly by how much? 270. And then we write there being correction of purchases from C. Kelly posted as 587 instead of 857. We go to which one? Number E. Cash bank of 390 had been credited to the bank, column, and debited the cash. So you must first of all open these ledgers to assist you know what happened. So we have cash account. Here we have cash account. And then here we have the bank account. So we have those two accounts. So now we go back. Cash bank of 390. So when you bank cash, how are you supposed to post? You're supposed to credit cash, isn't it? And then debit bank, isn't it? So cash bank of 300 had been credited to the bank account. So they credited here. They wrote here. Had been credited to the bank account. Had been credited to bank account and debited to the cash 390. Are you seeing? So this amount should have been this side and this one this side. So how do you rectify that one? You double the amount, is it? You double, isn't it? So you debit the one that is supposed to be debited, this one you double it. Why? So that one amount cancels the wrong posting and the remaining amount posted the way it was supposed to be posted. So here we come here and write bank, number 5. We write here bank, double the other amount, how much is it? So this is error of Complete reversal. So you double it. How much is it? 780. And the other one is cash. 780. Then you narrate. You say being deposit of cash to the bank account that was wrongly posted to the cash account and bank account. Then we go to F. Is it F? Cash drawings of 400 had been credited to the bank, column of. The cash drawings or cash drawings of 400 had been credited to the bank column of the cash book. Cash drawings, isn't it? So when you withdraw cash ukitoa cash, you have taken cash for your own personal use. What is a double entry? You're supposed to credit cash. So you're supposed to have said here drawings, isn't it? How much? 400, isn't it? This is drawing. How much? Cash, 400. Now the problem is, here it was correctly posted, but the problem was they posted in the bank account instead of cash. It was credited in the cash account instead of, it was credited in the bank account instead of cash. The drawing had no problems. So now we want to rectify, isn't it? So we debit what? Bank. You debit in order to cancel that amount. So here, number 6 here. So here we have bank. How much? 400, and we credit cash. Ama nimeenda haraka hapo. So we have another account here we call bank. Ndio. Ile kitu walifanya, they took cash. They took cash for personal use, which you call it drawings in business language. So now these drawings is supposed to have been credited here, but they credited here. So they wrote here drawings 400. The proper account should have been this one. So they should have credited here and debited here. So they credited here and debited here. Now we want to rectify it. We cancel this one by debiting it, isn't it? And we credit. So every correction must have debit and credit. So you tumemaliza, sindio? And then you narrate. Can you narrate for us? Supposing you're the one narrating, how will you have narrated? How will you have narrated? Anyone who can narrate? You can even narrate in Swahili, no problem. So you are not, so being correction of cash drawings wrongly posted in bank account, isn't it? Instead of cash account. Number 7, return inwards of 168 from M Black had been entered in error in J White, isn't it? Return inwards. You know what are return inwards? What are return inwards? Sales returns, isn't it? So what is the normal entry? How do you post returns? You've sold goods to a debtor or a customer. And then that customer is returning goods. What is the double entry for that? You debit. So here we have return inwards, isn't it? We have return inwards. And then we have the data here. So the data in this case is who? M Black. And then we have another one called J White, isn't it? So they were return inwards of one from M Black, isn't it? Who had been credited to the, had been entered in J White, isn't it? So the double entry is you debit what? Here, isn't it? So you write the person who is returning goods. So here it's supposed to be M Black, isn't it? M Black is the one returning 168, and you credit here, isn't it? You say here returns 168, but they did not. Instead they posted here to this other data here, J White, instead of posting to M. Yeah, the data who was returning goods is called M Black. Sindio? Ule anarudisha goods anaitwa nani? M Black, sindio? So now we cancel the amount. So walipost hapa. Badala ya kupost wapi? Hapa. So tuna debit J. So tuna debit J White. Na tuna credit So hii ni 168 na hapa ni 168. Alafu una narrate. Aya, twende ya mwisho. A sale of motor van of 1,000 had been created to the motor expenses. A sale had been created to motor expenses. Had been credited to motor expenses. So they sold a motor vehicle. A motor vehicle is an asset. Anyone who can tell us how you're supposed to post when you sell an asset? What is the double entry for that? You sell an asset. How are you supposed to post it in your books? You credit what and you debit what? You credit motor vehicle. Motor vehicle. Are you sure? You sold, umeuza, sasa unauza, una gani na gani? Umeuza, unafaa debit wa gani na credit gani? Sales. Sales only pertains to the inventory items, stock items. When you sell non-current asset, you don't post it as sales, isn't it? Sales, you only post those goods that you deal with on daily basis. On daily, kama unauza mkate, sales involve kuuza mika. Yeah. Ukiuza van, huwezi weka kama sales. Si ndio? Sawa sawa. So we said we have disposal account. Disposal. So when you dispose asset, we said you have a disposal account. I think we dealt with this one very. So when you sell an asset, you debit bank because money is coming into the bank, and you credit disposal. So the problem is they credited what? Motor expenses. They credited motor instead of crediting. So yeah, we debit motor, we debit motor expenses, isn't it? With how much? 1,000 to cancel this, and then we credit what? Disposal with 1. So that is basically how we correct errors. When they tell you to correct errors, definitely the journal entries must be involved. But you also involve this one will be your workings. You open some small ledger accounts elsewhere for your workings. For you're given stationery for working. So that one should not be an issue. So you can work it separately. And then this is the answer they want, this one, not the ledger accounts. So they won't mark the ledger accounts, they will mark this one. But the ledger accounts will assist you to get this. So we got sometimes you can make errors and you go ahead to prepare statements, the final statement that include the errors. You made errors, but you go ahead and make statements that are also having those errors. So you need to rectify the errors and you rectify your statements. So that is what we want to see. So we have example number 2 there. You go to example number. Are we in the example number 2? Any questions so far? Anything that is not clear? Yes. What happened here is that they sold the motor vehicle, isn't it? And then they received the amount of the sale, isn't it? We call them proceeds. So the normal entry is you need to debit your bank account, the business bank account, you debit it. And then you credit the disposal account. You credit, but they told us they credited what? Motor expense, isn't it? So they credited here 1,000, which is wrong. They're supposed to have credited here. So now we cancel here by debiting this one, and we correctly post it where it's supposed to be posted, credited, isn't it? Another question. Okay, we go to example number 2. The statement of financial position of Patel's, a sole trader, as at 31st March 2020 was as follows. So given the statement of financial position, meaning they had already, for you to come up with the statement of financial position, you have already prepared your income statement, and now you have prepared the statement of financial position. Further investigation revealed the following information. Number 1, the closing stock included damaged goods, which although they cost 10,000, has estimated sales value of how much? 7,500. So they're saying in preparation of the above statement, we had a stock item of 10,000, which is damaged. It can only fetch now how much? 7,500. Number 2, debtors include 20,000 in respect of a customer who has gone bankrupt. A provision for doubtful debt of 12.5% is also required on the balance of the debtor. So the debtor's balance that is indicated in the statement of financial position, it includes the amount of 20,000 to a customer who has been declared by. Number 3, the machinery was acquired 5 years ago and is being depreciated or to its scrap value on straight line basis over 8 years. A more realistic estimate indicates that the lifespan will be 10 years. Number 4, wages owing at 31st March 2020 amounted to 9,500, but these have not been reflected in the accounts. Number 5, charges for the bank overdraft amounting to 8,000 shillings has not been reflected in the books. Number 6, in arriving at the profit for the period, a drawing of 100,000 shillings paid to Mr. Patel had been deducted as an expense. Number 7, 20,000 rent owing to Mr. Patel for the letting of part of his business premises to the external party had not been received and no entry had been made in the books in respect of this item. Required journal entries to correct the errors and omissions, and B, a statement of revised profit for the year ended 31st March 2020, and C, a revised statement of financial position as at 31st March 2020. Are we together? So now we're going to rectify the errors and go ahead and come up with the revised statements. So always when you're rectifying errors, you have to have the journal entry. So you open here the journal entries. This is how they appears. We have the debit and credit. Debit and credit. So we start with the number 1. We start number 1. Number 1, the closing stock, it includes damaged goods. Damaged. So the closing stock, it includes damaged goods. The closing damaged goods, which although they cost 10,000, this is the cost of these goods, this is the cost. But the net realizable value, the value at which they can fetch from the market is 7,500, isn't it? So now this is a loss of how much? 2,500. So you need to post it in your books, isn't it? So you need to reduce your stock by 2,500. Stock is an asset. Assets have debit balances. So you need to credit your stock and debit stock loss, stock damage account, or so that one will be an expense, or you debit profit and loss. You debit profit and loss. To debit profit and loss means that item is treated as an expense, isn't it? So you have lost stock. When you have lost, for example, you bought this table at 10,000 and you find out you cannot sell it at 10,000. The only amount you can sell is 7,000. So you've lost how much? 3,000. That is an expense to you. So you debit your profit and loss and the credit. So here we're going to debit here, profit and loss account, 2,500, and you credit stock, paying reduction of stock as a result of damaged item. Iko shida hapo? Kila mtu ameelewa hapo, si ndio? Yaani stock, kuna stock value, wewe ulinunua 10,000 hapa, lakini ikaharibika. Sasa ile pesa unaweza iuza ni ngapi? Si ndio? So una hasara ya pesa ngapi? Sasa unapunguza hiyo stock na 2,500. Kupunguza stock ni kucredit. Stock inakuanga na all assets have debit balances, ndio? When you want to reduce them, you credit. And anything that is treated as an expense is you debit profit and loss account. You narrate. Umemaliza. Tunaenda number 2. Debtors include 20,000 in respect of a customer who has been declared bankrupt, isn't it? So you have an account of debtors. Debtors are those customers you sell to on credit, isn't it? Then when you discover that one of the debtors that you had sold to is declared, there's no need for you to hold that amount in your account because you will not be paid. When somebody is declared bankrupt means he has no capacity to, therefore it is unwise to keep on holding that amount in your account. So you write it off. How do you write it off? You credit debtors, isn't it? You clear it from your account. And then you debit bad debts or profit and loss account. So here you come here and write number 2, bad debts, which is how much? 20. And then you credit debtors. So being correction of a debtor who has been declared bankrupt. Besides, they're also saying they should also provide for bad debt, provision for bad debts, isn't it? On the balance of the good debtors. So before discovering that this debtor was declared bankrupt, the original balance of debtors, that is the balance brought down as per their statement, was how much? 420. This is the balance captured in the books at the balance of debtors, isn't it? So you less bad debts of how much? 20,000. So you remain with how much? So these are the ones that you expect to pay. These ones that I expect to pay, they're also saying we provide for depreciation. We provide for bad debts, isn't it? Of how much? 2 point. So provision, which is going to be 2.5% of 400,000. How much will that be? So 10,000, isn't it? So what is the double entry for provision for doubtful dates? How do we post in the books when you provide for doubtful dates? So provision means you are standing in for them. You estimate they will not pay. So you are standing in for them. Where are you getting this money? You're getting it from profit and loss? From your account, from your profit, isn't it? So you debit profit, and anytime you reduce your profit, you debit it, isn't it? So you go come here and write here, profit and loss account, how much? 10,000. Then provision for bad debts. Provision for bad debts. How much? 10,000. Being provision for bad debts. Naandika hiyo. Tumeelewana? So we are through with the note number 2. Note number 3. The machinery was acquired 5 years ago and is being depreciated to the scrap value on straight line basis over 8 years. A more realistic estimate indicates that the lifespan will be 10 years, isn't it? So they had a machine, they acquired a machine 5 years ago. According to them, but then they had estimated that machine will have estimated useful life of how much? 8 years. So now you know how to charge depreciation. We said it is cost over life, isn't it? So that is how what was the charge? It was 1.2 million. 1.2 million is the cost of that machine. True? Now 8%, 8 years. So how much is that? Huh? 150,000, isn't it? So 150,000 per year. And then they have done that one for how many years? Is it 5 years? So they have done that one for 5? It was acquired 5 years. That is what they have been doing for the last 5 years. How much is it? The 150 is for yearly. Then now you make it for 5 years. How much do you get? So they have the total charge for the 5 years is how much? Now the more realistic one, according to them, the realistic one should be 1.2 over how much? 10 years, isn't it? So it should be how much? 120. So the correct one should, in 5 years, that one will be how much? 600, isn't it? So in other words, they have provided for depreciation by how much? The difference by 150. So we need to write back this amount in the income statement or in the profit and loss. When you provide for depreciation, but they have provided depreciation by how much? 150. So we need to write back in the income statement this 150. So here we debit provision for depreciation by 150,000. Then we credit what? Profit and loss. Anything that is increasing the profits is credited to the profit and loss account. Anything that is reducing profit is debited. Sasa watu kulingana na wao depreciation ilikuwa inafaa ikuwe 150,000 kwa kila mwaka initially, lakini sasa wakaita expert wakamwambia hapana, hii mashine inafaa ikuwe miaka ngapi? 10. So walikuwa nafaa provide ngapi? 120. So wame over provide na ngapi? Excess na ngapi? 150. So tunarudisha hii pesa. Tunarudisha aje? The normal double entry is when you charge depreciation, you debit profit and loss account, you credit provision for, now you do the reverse. You do the reverse. So this one is done, and then you narrate what you are doing. Narration, everybody has his own language, isn't it? But nonetheless, you narrate if they want you to narrate. We go to number 4. Wages owing at that 1st March 2020 amounted to 9,500, but this has not been reflected in the accounts. So wages owing or accruals or accrued expenses, isn't it? How do we treat them in the accounts? How do we record them? Anyone who can tell us, how do we record accruals? For example, you have accrued rent of 10,000. How do you, what is the double entry for it? We say the accruals, you must charge them in the income statement. So you debit you increase that amount in the current, the very expenditure, isn't it? So you debit profit and loss, or you debit the expense, isn't it? And you credit accrued wages, isn't it? Accrued wages becomes an expense. So here you come here and debit wages. This one was omitted, 9,500. And then here you write here accrued wages. These accrued wages, it is a liability. That is why it has a credit balance. Will you omit? The normal treatment of accruals is that they must be charged to the income statement. By charging them means you recognize them as expense. So you add to the expenditure itself, or you debit your profit and loss account, and then you narrate. So we are through with number 4. We go to number 5. Charges for the bank overdraft amounting to 8,000 has not been reflected in the books. A bank overdraft is like a loan, a temporary loan. Okay? So when you take a loan in the bank, for example, and then you are charged that interest on the loan. So how are you supposed to post it in your books? Umeenda ukachukua loan wakakucharge interest. Sasa unataka urecognize kwa vitabu zako. Utafanya aje? You credit bank by the interest. You credit bank or the bank overdraft. You credit loan or bank. You credit bank loan. This is the loan, not the bank. You have taken here, when you take a loan, the overdraft is a loan, isn't it? Si ndio? Sasa hapa ukichukua loan, hiyo pesa itaenda wapi? Tuseme inaenda kwa account yako hapa. Si ni bank yako hapa. Na hapa ni loan. Account gaining you debit. So umechukua loan. So utasema hapa loan 10,000, si ndio? Kweli? Alafu hapa utasema nini? Bank. Ngapi? 10,000. Alafu hao watu wanakucharge ka interest ka 1,000. Ka interest ka 1? Si ita increase your loan. So utakuja uandike hapa interest. Si ndio? 1 na ukuja hapo ufanya nini? Interest. Useme loan. Ngapi? Si ni kweli? So ita increase ile pesa wanakudai, si ndio? Kama walikuwa wamekopesha 10,000 na wamekuongezea 1,000, so wanakudai ngapi? 11. Alafu utafungua account nyingine inaitwa interest, si ndio? Na hiyo iko nini? Expense. So that is the same. So kulikuwa na interest ya 8,000 on bank overdraft that was not recorded. So we record it. How do we record it? We come here and interest we come here bank charges ama bank charges. Hii ni bank charges tu. Tunaweza sema bank charges ama unaandika profit and loss. The same thing. So hiyo ni ngapi? 8,000, si ndio? Alafu hapa tunasema bank overdraft. Bank overdraft ina increase na ngapi? 8,000. Just a minute. So you do that one. And then that is number. And then number 6, in arriving at the profit for the period, a drawing of 100,000 paid to Mr. Patel had been deducted as an expense. So there's a drawing of 100,000. It was posted to the general expense account, isn't it? It was, instead of posting to the drawings account, the other account was correctly done. So the Mr. Patel took 100,000. Mr. Patel, the owner of the business. So instead of posting to the drawings account, instead of debiting here, he debited to the general expense. Sindio? So alikuja akasema hapa nini? Cash. He took cash. So 100,000. That is what he did. So now this amount was not supposed to be here. It was supposed to be here, isn't it? So we cancel this one. We debit general. We debit drawings, isn't it? So we debit drawings. How much? 100,000. And then we credit general. We credit general expenses. 100,000. Tumemaliza hiyo. Aya, twende kwa hiyo the last one. The last one, and then we rectify the statements. 20,000 rent owing to Mr. Patel for letting part of his business premises to external party had not been received, and no entry had been made in the books of the. So he has a premises that he had let it out, isn't it? A premises that he had let it out, and the tenant had not yet paid an amount equivalent to 20,000. So that is income earned but not yet received. We call it accrued income. Nani anaweza tuambia vile tunaitreat kwa accounts? Tuna accrued income. Si tulisema hizi vitu juzi. Si tulisema hivi, tulisema kama kuna accrued income, una debit accrued income. Accrued, and then una credit nini? Income. Yaani lazima urecognize hiyo mwaka, si ndio? Hata kama haijakuwa receipt, in line with what we call accrual concept of account. You know what accrual concept of accounting means? It means incomes must be recognized in the period and whether received or not. Whether received or, for example, you can earn, you see, earning is different from receiving. You have this is your building, and then the tenant is supposed to pay maybe 100,000 every month. So you have stayed the whole year, but the 2 months are not yet paid. Yeah, si ameishi. So unajua anafaa kulipe 200,000, haja kulipa. So hiyo lazima utarecognize hiyo mwaka yenye aliishi. Si ati ile atalipa. Tumeelewana? That is called accrual concept of accounting. So you need to learn those accrual, we call them accounting concepts. Ngapi unakumbuka? Apart from accrual concept, any other unakumbuka gani? Accounting concepts. Which one which one else do you remember apart from repayment? Prepayment is not an account. Prepayment is not an accounting concept, isn't it? So accounting concept, we say those are the principles that we observe or we use when you are making our statements. One of them is accrual concept, isn't it? Another one we call it consistency. Another one we call it going concern. Another we call it substance over form. Another one is called duality. You remember substance over form? Substance over form, none another remember? So you people are not reading. You read 1 week to exams. Or you came late so that you don't have that information. You came late so you don't have that information. How many came late and they don't have that information? And you have never bothered to ask. So it is a responsibility of who? Of the teacher to ensure that you have everything. Or your parent. So you are not, you don't have any responsibility, isn't it? So when you come late, you become proactive. You find out. Unafanya nini? Unachunguza. Hizi vitu zinafanywa aje. Si ndio? Ama unaweza blame shule, unasema hii shule iko na stairs mingi sana. Kufika huko juu ni ngumu. Si ndio? So tunasema sasa hapa tumesema you credit, you debit accrued rent, which is how much? 20. And then here we rent income, which is 20,000. So that is how we rectify errors. Any questions so far up to that point? Any questions so far? So now these errors were there, but they still made the statement having these errors, isn't it? So now we want to rectify the statements in corporate. So come here, statement of corrected profit. So come here, write statement of corrected profit. A statement of corrected profit. So we start with the reported profit, the one that they had reported having errors. Reported profit. Reported profit. How much is it? You go to the statement of financial position that was provided. There's profit there. You've seen 450. So this is the reported profit of how much? 450,000. This is the profit that they had produced, or this is the statement that the statement that was done for that period, but it had these mistakes. So now we want to rectify it. Umeona hii 450 pale imetoka. So now we come, these are our errors. This is our errors that we have discovered. So we go each and every error, we interrogate how does it affect the profit. For example, error number one, there was stock that was damaged, isn't it? So ordinarily you're supposed to reduce you're supposed to debit profit. You see, even it's on the debit side. So we come here, we write here damaged stock. This one was not adjusted. Damaged stock. We debit profit and loss. It means we reduce our profit by that amount. Hii tumemalizana now. Si ni kweli? Ama number one, there was damaged stock, which was not adjusted before that profit was arrived at, isn't it? Now we have already known that there's damaged stock. So the normal correction is it's supposed to reduce our profit. We come here and reduce it here. We go to number two. There was bad debts. While preparing that statement, this one had not yet been discovered. So bad debts, we're supposed to do what? Debit profit and loss account. It's an expense. It's already on the debit side. So right here, bad debts. Ngapi? 20,000 unatoa. Inafaa itolewe. Alafu they had not yet provided for provision for doubtful debts. We provide. So provision for bad debts here. Provision for bad debts. How much is it? 10,000. So unaona wamesema tu, unaona vile wameandika profit. Kama wana debit profit and loss pia unafanya tu hivyo. How much? 10,000 unatoa. So tuko hapa. Provision for depreciation. So there was over provision for depreciation by 150, which now necessitated that we write back that amount, isn't it? So you come here and write provision for deep. This is now positive 150. So unaona wame credit hapa. Wame credit na unaandika hiyo kitu. Wame debit na unaandika hiyo kitu. Si ndio? Hii ni debit, ni hiyo tu. Sasa hapa tulikuwa tunaandika profit and loss, si ndio? Tumeelewana? Hii walikuwa wame over provide for depreciation, so we need to write that back. So this one will be a positive figure. Tuna add back. In bracket means minus. Tumeelewana? So we are here. Accrued wages. Accrued wages tunasema lazima ucharge kwa income statement, si ndio? So tunaandika hapa nini? Wages. Ngapi? 9,500. Tunatoa hii, ndio hii hapa. Bank charges za 8,000, wako wameandika bank charges. Tutakuja hapa tunaandika bank charges. Za ngapi? 8,000. Hiyo tunatoa, ni debit. Drawings, hapa drawings, expense, drawings ilikuwa imetritiwa kama expense. So hiyo ilikuwa imereduce nini? Profit, si ndio? Walikuwa imereduce nini? Profit. So unaongezea hapo na zile hapa drawings. Ngapi? 100,000. Hii. Alafu hapa kulikuwa na accrued rent. Accrued rent inafaa ikuwe nini? Tumesema tu credit rent income. So credit rent inamaanisha hiyo itaenda kwa credit side. So unaandika hapa rent, accrued rent yenye iko recorded. Accrued rent. Ya ngapi? 20,000. Hiyo una add. So unapata hapa corrected profit. Corrected profit. Haya, fanya hivyo. So should have been the corrected profit, 670,000. Then here we come here, statement of corrected statement of financial position, corrected statement of financial position. So to another non-current assets here, you write non-current assets, non-current assets. So you write there non-current assets and then you underline. So here you can write shillings here. So the first one was land and building. This one had no issues at all. So you write it the way it was, land and buildings. That is the first item there in the statement of financial position that was given. This is 1,650,000. This one had no correction or no problem at all. But we had machinery. The next one is machinery. So it was 1.2 million. That was the cost. But the accumulated depreciation according to them was 750, but it's supposed to be 600,000, isn't it? Sinikweli. So this one would be how much? 600,000. They had deducted 750, but according to our revision, it's supposed to be 600. So those are the only assets we have. Then here we come to current assets. Current assets. So here we had stock. Stock had issues. Stock had a damaged item of how much? 2,500. So you take the figure that was there, stock here, right here, stock. It was 570,000, but they had not yet adjusted for this. So you adjust. They are saying here we credit stock. 25. How much do you get there? 567. 567, 500. Debtors. You remember debtors? It was 420. We deducted 20 for bad debts, and we deduct 10 for provision. This one. Provision, we know we normally deduct it from debtors, isn't it? Provision for bad debts, we deduct from debtors. So this was the bad debts. This was a figure that was captured in their statements for 20, without taking into consideration that we have bad debts of 20 and provision of 10. So we adjust. So what do we get? 390,000. You write here 390,000. And then we had the rent receivable. This one, it was not captured anywhere. Rent receivable is an asset. So we write here rent receivable. It was not paid. So that is how much? 20,000. So those are the only assets. And then here we add. Then here we write here capital and liabilities. Capital and liabilities. Capital and liabilities. So we have capital. Capital had no problems. What is the value of capital? 1890,000. And then you add the net profit, the corrected one, which is now 670. Then you less drawings. You less drawings. The one that were indicated there, drawings that were indicated there was 150. Of course, you add this one that was also treated, this expense. You know, this drawing that had been treated as an expense, you include it here, you add here. So it is 150 plus 100. That one is how much? 250,000. And then you subtract. And then your current liabilities there. So we have creditors. Creditors had no problems. It was 630, so you retain 630 the way it was. And then we have accrued wages. Accrued wages here. Accrued wages is a liability. So right here, accrued wages. So in other words, you need to know of this one, which one affects the statement of financial position. You need to know which one affects the statement of financial, like this one, both income statement and statement of financial position. This one, both. This one, both. This one, both. Isn't it? Mostly it was. Then here, so we have accrued wages of how much? 9,500. And then we have bank overdraft. Bank overdraft. It was 270,000, and then you add this 8,000 that had not yet been added on the interest. Now we're happy. 278,000. So that you get the totals. That is how we correct errors, and we go further to rectify statement of financial position. So at that point, we have dealt with errors that do not affect the trial balance. Do you still have energy so that we proceed? I want us to look at errors that affect the trial balance. Are you still energetic enough? Yes. Your advantage is that you have a lot of energy, isn't it? That is your advantage. But do you know your disadvantage? At every stage of life, you need to know your advantage. At every stage of, at this point, you have a lot of energy. But what is your disadvantage? None another your disadvantage. You're not wise enough, isn't it? You're not wise. That is a disadvantage. So when you want to be wise enough, you mingle with those who have wisdom, isn't it? Because when you miss food at home, you can even burn the house. Isn't it? If you happen to miss lunch or supper, there's high chances that you can burn the house. You've seen school being burned by students. Have you seen it? Is it wise to burn a school? It's not wise, isn't it? So let us look at errors that affect the trial balance and the suspense account. And the suspense, so we go there, everybody, errors that affect the trial balance and the suspense account. These type of errors are reflected on the trial balance because the debits will not be the same as credits. So the trial balance will not balance, so they will be reflected. So the debit may be more than the credit and vice versa. So suspense account, it's an account in which items are entered temporarily before allocation to the correct or final accounts. So we have mostly we find that these are errors that affect only one side of the account. Now to complement so that you finish the double entry, we open the suspense. So it's an account, suspense account is an account that is open to supplement double entry when you are correcting errors. Because now you find that these are errors that are made on one side of account. The other account is correct, but the other one is incorrectly done. So you need to complement. So to complement it, we use suspense account. So suspense account is used where errors affect only one side of account. So examples of these errors, I have seen questions asking students to list examples that affect the trial balance. Number one, examples, transaction is posted on one side of the account, i.e. only one debit entry or credit entry. So you only debit, but you don't complement it with credit. That is an example. A transaction is posted on one side of the account. Is that okay? Two, a transaction is posted on one side of both accounts. A transaction is posted on one side of both accounts. For example, you buy goods from C. Kelly. And here we have who? Purchases, isn't it? So when you buy goods, you're supposed to debit what? Purchases and credit C. Kelly. But you debit both. Are you getting? So it will not balance. It will be revealed by the trial balance. So a transaction is posted on one side of the account. Are we together? A transaction number three, a transaction is posted correctly but different amount. You posted the transaction correctly but different amount. For example, here you purchase from C. Kelly, so you write here purchases. The correct amount is 5,000. But here you come here and write here C. Kelly, 50. Are you seeing? So here is 50 and here is 5. So you kama unaona hiyo maneno. So hizi vitu saa zingine wanataka student to explain hizo errors. Na student wanashindwa. Sasa mimi sijui kwa nini. Kama last time ukiangalia sijui kama kuna hiyo past paper last time. Anyone with that last sitting past paper? Hiyo ya last sitting. Na si iko kwa hiyo past papers. Can you check it the first page of that question paper? Hiyo ya ilifanywa last sitting. Can you read the question number 1? Anyone who has got it? Umepata? Can you just read? You see, and that some people will say it was difficult. So some students believe that what we discuss in class cannot be tested so easy, so cheap. So they go and find out other information that they feel that one can be tested. That is some student, not all students. Some means a portion of students. So to them, whatever is being taught in class is very simple. It can never be tested. You see, these things, they appear simple. You think that they cannot be tested, but you see they want being tested. And then we had a list of there, they wanted you to correct those, just the things that we are doing. Okay? So in other words, before you go for other information, just exhaust what you're being given, and then go for others. You're not limited. You exhaust this one and then you go for others. Now, we are trying to know those errors that affect the trial balance. So we have enumerated how many? 4, isn't it? 3. Number 4, errors on balances of account, i.e. understatement or overstatement of account balances due to mathematical errors. So you understate one side or you overstate. And then number 5, balances on account is shown on the wrong side. So the balance brought down, maybe it was a debit balance, you bring it as a credit balance. So those are the errors that affect the balancing of the trial balance. You're supposed to know them to explain them. So to correct the above errors, the appropriate or the adjusting entries are made through an account called suspense account. Suspense account. Unaona? For example, kama understate sales, understate sales. If you have understated sales, maybe na figure. So the sales figure hapa ni debtors. Kuna debtors hapa. So debtors, the correct figure for debtors, this is just an example. We have debtors. You sold goods valued at 100,000. So you write your sales 100,000. Na hapa unakuja unaandika 90,000, si ndio? Umenielewa? So hii account haina shida, hii ndio ina shida. Si ndio? So unafaa uongezee 10,000 ikuwe 100. So unajua unafaa credit nini? Sales. Na sasa uwezi tena andika, uwezi tena open debtors iko sawa. So ile complementary itakuwa nini? Suspense. Umenielewa? So hii iko sawa. Problem ni hapa tu. So understatement na overstatement lazima, ukisikia tu understatement na overstatement, suspense lazima iingie hapa. Tumeelewana? Yes. So we have example, it is December 2021 pilot paper. CPA December 2021, the pilot paper. I have attached that paper, that question there, but you can open it in your accounts there. Example. So December 2021, question number 5, pilot paper. So hiyo nimeattach hapo. Kama if you find it difficult, you can just use the one that I've typed there. So question number 5, you'll do it, you'll see it, it is there. So December 2021, the question read, a bookkeeper ended a trial, extracted a trial balance on that 1st December 2020 that failed to agree by 330,000. A shortage on the credit side of the trial balance. A suspense account was open for the difference. In January 2020, the following errors made in January 2021, the following errors made in 2020 were found. Sales day book had been undercast by how much? 100,000. Sales of 250,000 to J Church had been debited in error to J Chane account. And number 2, rent account had been undercast by 70,000. Discount received account had been understated by 300,000. And the sale of motor vehicle at book value had been credited in error to sales account for how much? 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,000. 80,0 360,000. Required, show the journal entries necessary to correct the errors, 3 marks, and draw up the suspense account for the errors described above, 5 marks. And number 3, if the net profits had previously been calculated as 7,900,000 for the year ended at 1st December 2020, show the calculation of the corrected profit, 4 marks. Total marks, it is 12 marks, isn't it? Total marks, how much? 12 marks, isn't it? So now we come here and correct the errors. So here we come here and correct the errors. This is December CPA, December 2021 pilot paper. So you must have debit or credit. So number 1 inasema nini? Sales had been done what? Undercast. By how much? 100. Ukisikia undercast, suspense lazima tu ikuje. Ukisikia overcast na undercast, lazima utatumia nini? Suspense. So ukisikia ni undercast, unajiuliza hiyo account inakuwa na which balance. Kwa mfano sales inakuwa na credit balance. Sawa? Sales always has credit balance. So now it means this side was understated. To undercast means to understate. By how much? 100, isn't it? So you need to make it the correct amount by, so you need to correct it, isn't it? You need to credit what? Sales to make it the correct amount, isn't it? So now the complementary entry will be suspense. So you write here suspense. Ngapi? 100,000. Alafu pale unasema nini? Sales. Una make nini? 100,000. So being correction of undercasted sales. If any account is undercasted, just ask yourself, is it a debit balance or a credit? If it's a debit, it means the debit side was understated. So you make it the correct value by adding it to the debit side. If it has a credit balance, then the way sales has a credit balance, then it means the credit side was understated. So you need to make it correct, isn't it? So you need to add it there to make it what it should be. So you underline. And then there is hiyo ingine nasema nini? Sales to. Number 2 nasema sales to J charge, isn't it? Sales to J charge was made in error to J gen. Sindio? Which kind of error is this? Error of commission, correct. So they made sales to this customer, the name J charge. Instead of debiting his account, they debited whose account? So here how much here? It was how much? 250. Senor. So instead of debiting here, they debited here. We don't have, so is this, you see, this is an error affecting 2 accounts. Senor. So we cancel here by 250 and we debit. So we debit who? J charge. How much? 250. And J channel. How much? 250. Being correction of sales to J charge wrongly posted to J channel. Next. The rent was done what? Rent account had been undercast by 70. Rent account is an expense. Expenses have debited balance. All expenses unakuanga na debit balance. So ukisikia iko undercast, na maisha hii side ndio ilikuwa less. So unaongezea hiyo side. Do you make what? Correct. So unakuja hapa una post rent hapo, unasema rent. Ngapi? 70. Nimekuambia kitu chote ukisikia tu undercast na overcast, suspense lazima iku complementary entry itakuwa nini? Suspense. Rent peke yake ndio ilikuwa na shida. Cash haikuwa na shida. Si ndio? So unakuja hapo unasema nini? 70. So unasema being correction of undercasted rent. Being correction of undercasted rent. We go to the next one, which says discount received account had been undercast by 300,000. Discount received. Discount received na balance gani? Discount received na balance gani? Credit, sindio? So walisema discount in income. All incomes are credited. Double ni rahisi sana. All incomes are credited. All liabilities are credited. Capital is credited, sindio? All expenses are debited. All assets are debited, sindio? Shida iko wapi? Sasa tunasema discount received account had been undiscussed by 300. So how do we rectify it? Anyone to suggest for us? Which account do we debit and which one do we credit? We debit suspense, isn't it? So this is number 4. We debit suspense. How much? By 300. And we credit discount received. By how much? 300,000. So the normal double entry for discount received is that you debit creditors and you credit discount received. The creditors had no problem. Where the problem is the discount received. They are very specific. It was under not both of them. Unanielewa? Ile ingine wali correct, we wali enter the correct amount. Shida ilikuwa kwa discount received. Ndio maana wamekuambia. Twende next. The sale of motor vehicle at book value had been credited in error as sales. Sawa, nani anaweza tu rectify hiyo? Nani anaweza tu rectify hiyo? Tumunulie lunch sahi. Sisi wote. Tumchangie, kila mtu amchangie. 50-50 itakuwa mingi, si ndio? Anaweza overeat. Sasa nani anaweza we have made such a kind of correction, si ndio? So where do we do it? So we debit sales, isn't it? We debit sales how much? 360, and we credit disposals, ndio? Ngapi? 360. Tumemaliza hiyo. Alafu wamesema tufanye nini? Tutengeneze suspense account. So unakuja hapo unaandika hapa suspense account. So suspense account. So suspense account unaanza na ile balance. So the balance, where was the balance? You need to determine where the balance was. A bookkeeper started a trial balance at 1st December 2020 and failed to agree. By how much? 330. A shortage on the credit side. So the balance was on the credit side. Where the balance, when you're balancing the trial balance, kwa mfano kuna trial balance like this. So kuna debit na kuna credit. So ukuje upate hapa, umeadd vitu zako zote, ukipata hapa ni 100,000, si ndio? Na hapa ni 90,000. Zimefail ku agree, si ndio? So utakuja uandike hapa suspense. Kwa ile side inaonyesha less amount. Utakuja uandike hapa 10. Kama ni debit unaandika side ya debit, si ndio? So hapa balance brought down itakuwa hii side. Balance brought down itakuwa ngapi? 330. So utaandika hivyo. So ukishaandika 330, utakuja hapa pale kuna suspense. Unaona hapa ameandika suspense iko debit side. Utaipia utaiandika hapa debit side. Lakini imetokana na nini? Sales. So utaandika hapa sales. Ngapi? 100,000. Tumeelewana hapo? Tena unakuja pale kuna suspense. Suspense iko side gani? Ya credit. Lakini unaandika hiyo account nyingine unasema rent. Ngapi? 70,000. Haya, tunakuja hapa. Si suspense ni hizo tu. Kuna nyingine hapa. Tunaandika hapa discount. Discount received ngapi? 300,000. Kuna kitu kingine? So unakuja una add zinafaa zibalance. Itakuwa itakuja 400,000 hapa. So hivyo ndo tunatengeneza suspense. Sawa. Aya, tuende kwa statement of corrected net profit. Statement of corrected net profit. Statement of corrected net profit. So utaanza na reported net profit. You start with the reported net profit. Reported net profit. Reported net profit ngapi? 7,900,000. si ndio? So unakuja hapa umeundercast sales zako. Sales zako umeundercast. Sales inakuwa kwa income statement. Ukiundercast sales ina affect aje profit yako? Normal way. You've undercasted your sales. Yaani wewe ulikuwa na sales. Tuseme ulikuwa na sales za 100,000, si ndio? Lakini wewe ukasema ni 90. Na expenses zako ni 10,000, si ndio? Sasa hapo wewe ulisema ni 90, si ndio? Wewe ulisema ni 90. Tunatoana. So you had sales of 100, but instead of quoting 100, you quoted how much? 90. So hapa expenses, tuseme hizi ni expenses, si ndio? 10,000. Hapa ni expenses ngapi? So tunataka kuona impact kwa profit yako. So hapa profit inafaa kuwa ngapi? 90. Na hapa itakuwa ngapi? 80. So ukienda sales unamaanisha nini? Umepunguza nini? Profit. So unafanya nini? Una add. Si ni kweli? Tunasema hapa undercasted sales. So undercasted sales. Undercasted sales ngapi? 100. Una add 100,000. Iko shida? Aya, tuende hapa. Hii hai affect income statement, si ndio? Hii ina affect debtors tu, si ndio? No income statement. Aya, tuna rent. Uli undercast rent. Rent ni expense. Uli understate your expense. So ina impact gani kwa profit yako? Ime increase profit, si ndio? If you understate an expenditure, it means your profit will be increased, si ndio? So what do? Understated rent. Understated rent. How much is it? 70. Una less. Kwa salama. Tunakuja hapa discount received. Discount received ilifanywa nini? Ilikuwa undercast. Discount received ni nini? Income, si ndio? So unaongezea, si ndio? Undercasted discount received. How much is it? 300,000. Tunakuja hapa. So wewe uliuza asset na ukaongezea kama sales, ndio? Inafai kwenda hapo, si ndio? Inamaanisha uli increase sales zako, si ndio? Ukiincrease sales unamaanisha increase nini? If you increase sales by mistake, it means you have enhanced your profit by mistake. So you're supposed to disposal of motor vehicle hapa. Disposal of motor vehicle. 360. This one you subtract. Then you get the corrected net profit here. Corrected net profit. How much will it be? Corrected net profit. Eh? 7,870,000. 7,870,000. So that is how we do correction of errors. We have done everything that you're supposed to know on errors. That is how it is set. So you can attempt last sitting question. That was April 2020 assignment attempt. April 20. Is it 2023? Question number 1. November 2020. Question number 1. And then he also attempt May 2021. May 2021. Question number 2A. Kama unafanya ATD, nani anafanya ATD hapa? ATD 1. Ukuje nawe ni kuongezea maswali mengi. In addition to this, unakuja ni kuongezea maswali zingine, si ndio? The younger you are, the more energetic you are, the more questions you do, isn't it? Sawa. So that one will bring us to the end of that topic, but I will want to confirm by how you perform those assignments. If you handle them correctly, then we can proceed. Otherwise, today we are through with the correction of errors. What is your responsibility? Do what you have done, repeat it. Repeat it again, identify questions, do them. Keep on doing them. If they come in exams, you pass. That is how we pass exams. Hiyo ndio kusoma na bidii. Sawa. Sikubeba bag na kuja shule. Sawa. Like